I've been trading for over 5+ years and I've tested hundreds of different strategies and concepts. And it took me years to realize that simplicity is key when it comes to trading in the markets. And fast forward to now, I use one simple scalping strategy that's based off of the first candle. And in today's video, you'll learn exactly what the first candle scalping strategy is, along with the exact steps on how to execute the strategy. And then I'm going to show you real trades in real time. Let's get into it. Why do most traders lose money in trading? And there can be plenty of different reasons on why this is the case. You might not have proper psychology. You might not have a proper system and strategy in place. You just might not have an edge in the markets. At least for me, when I first started trading, I was stuck in this vicious boom and bust cycle. Every time I thought I was doing better or thought I was gaining progress, it felt like I was taking 2 steps forward and 3 steps back. And this is what's called the boom and bust cycle. And I was stuck in this vicious cycle, and it felt like I was just running around in a hamster wheel doing the same things over and over again. And it took me years of losing to understand this, that simplicity equals profitability. When you keep things simple when it comes to trading, the more profitable you're going to be. It sounds a little bit counterintuitive, but once you really experience it, that's when it's going to start to click. Less is more when it comes to trading. A lot of traders, when you first start out, there's so many different trading strategies. You have ICT, SMC, support and resistance, supply and demand. There's so many different trading strategies and setups in the markets, and you might be confused on which one to choose. What you have to understand is that every single trading strategy works. There's no trading strategy that's better than another. All you have to do is have a proven edge in the markets and stick to your strategy. Another common mistake is that there are too many indicators on their charts. When I first started trading, I was using so many different indicators, the MACD, the RSI, the Bollinger Bands, and I had different types of indicators plastered all over my chart. And what I realized was that I was overcomplicating my trading. I was looking at too many different signals that these indicators were providing, and I wasn't focusing on what really mattered, which was price action itself. Most traders don't have a proven system and strategy. A lot of traders are just hopping from strategy to strategy. They have plenty of indicators plastered all over their charts, and they just don't have a single clue on what they're doing, and they don't have an edge in the markets. And in today's video, I want to share with you one of my personal favorite trading strategies that I've been using for over 5+ years. And it's one of the first trading strategies that I used as a beginner trader. And it's called the first candle scalping strategy. And this strategy is one of the easiest strategies that you can use and that you can implement into your toolbox today in your trading. And what does the first candle strategy tells you? The first candle strategy tells you the overall direction of the markets within the first 90 minutes of market open. It's very powerful to understand, especially if you don't have a strong bias coming into the day. You can mark out that first candle and it'll give you an overall market direction within that first 90 minutes. Next, it helps you find winning trades and accurate entries. What's great about that first candle, it's very precise since you're on the lower time frames, and it also helps you avoid unnecessary losses. So it'll help you avoid getting faked out coming into market open. So this is what the first candle will tell you. And in today's video, we're going to go over the first candle strategy, and the goal is to identify winning trades within the first 90 minutes of market open. The best part about this strategy is that it's repeatable and mechanical. It doesn't require any daily bias, fancy indicators, and it also sets up every single day. And what this does is it takes the guesswork out of your trading. As I mentioned, it's very mechanical, it's repeatable, it sets up every single day. So all you have to do is follow the steps on what I'm about to share with you in today's video. So as you can see right here, there's so many different candlesticks on the chart. You can see we have bearish candles, we have a downtrend, we have bullish candles, we have a nice push higher, we have some hammer stick candles, we have some engulfing candles that push price back towards the downside. We have so many different candlesticks on a chart, and as a beginner trader, you might be a little bit confused on what to focus on. So instead of focusing on the full range and every single candlestick in the markets, what we're going to be doing is focusing on the first candle of a new market session. And the reason why we want to to focus in on that first candle is because the most volume occurs in the first candle. As you can see right here, that first candle is going to be very important once the market opens. As you can see right here, the highest volume occurs in that first candle. And then you can see the volume tapers off after the fact. But that first candle has the highest volume. So that's the candle that we want to focus on coming into market open. So now that we understand we want to focus on the first candle, which session should we focus on? So it's really broken down into 3 sessions. We have the pre-market, which is also called the London session. We have the New York session, which is regular market hours. We have the after hours, which is also called the Asia session. And then we have the London session and pre-market once again. As you can see here on our screen, where is the most volume on our charts? The most volume occurs in the New York session. As you can see right here, we have major volume that flows into the markets during that New York session. It tapers off in the after hours and pre-markets and then picks right back up in that New York session once again. And you can see the highest volume candle to start off the day is going to be that first candle of New York session open. You can see right here, that highest volume spike occurs right at market open. So as I mentioned, we want to be focusing on the New York session since that is the most volume. And then we also want to focus in on that first candle, which forms at 9:30 a.m. Eastern Standard Time. If you live anywhere else in the world and you don't live in Eastern Standard Time, make sure you adjust your time for EST since this is the time zone that you want to be focusing on, which correlates to the New York Stock Exchange and the New York Open. And this also works in any market: stocks, options, futures, crypto, forex. The time zone may be a little bit different. What we like to focus on primarily is stocks and futures, but you can also backtest this yourself on crypto and forex. So as you can see right here, what we want to do is wait until the market opens up at 9:30 a.m. Eastern Standard Time. And what we want to do is let the first 5 minutes play out. So currently we're on the 5-minute time frame and we're going to let that first candle develop, which is on the 5-minute time frame. So we're going to wait for either one 5-minute candle to form or we're going to wait for 5 1-minute candles to form. Step 1, mark out the high and low of the first 5-minute candle of New York Open. As you can see here, we have that first 5-minute candle played out. We're going to mark out the high, we're going to mark out the low, and we're currently on the 5-minute time frame. Now what we want to do is wait for a clear direction in the markets. We have that 5-minute high, we have that 5-minute low played out. We're now looking for a break towards the upside, or we're going to be looking for a break towards the downside, and we're essentially waiting for a clear direction in the overall markets. Once that occurs, step number 2 is wait for a 1-minute candle close above or below the 5-minute range. So as you can see right here, we're currently on the 1-minute time frame. We have that 5-minute high and that 5-minute low played out. Now what we're doing is waiting for a 1-minute candle close underneath that 5-minute range low, looking for continuation towards the downside. Or if we ended up having a 1-minute candle close above your 5-minute range high, we'd be looking for continuation towards the upside. Next, what we want to do is wait for a retest of the 5-minute range high or the 5-minute range low. So as you can see, we had that 5-minute range high and 5-minute range low marked out. Now we're breaking towards the downside and you can see strong candle close underneath that 5-minute range low. So now in this case, we're going to be looking for the retest off of your 5-minute range low for this continued push towards the downside here in the overall markets. If we had that break towards the upside, then we'd be looking for the retest for continuation higher. In step number 3 is our entries, stops, and targets. So once again, we have that 5-minute range high plus that 5-minute range low. We're waiting for that break, which we get here. We're coming back for the retest. You can see super nice reaction right off our 5-minute range low. We're going to go over examples on different entry models here in a second, but what we want to do is have our entry right at our 5-minute range low. We can have our stop just a break above our 5-minute range high, and now we can be looking for continuation towards the downside. Preferably, we're going to be looking for a 1-to-2 risk to reward ratio, which primarily means we're looking to risk, for example, $100 to look for a $200 gain. So this is exactly how to execute the first candle scalping strategy. Now let's go on to the charts to see exactly what this looks like in real time. So as you can see right here, we're currently on the 5-minute chart and we're on Tesla, and I'm going to go through a few days worth of price action to show you guys exactly how to execute this strategy in real time. So as you can see, the first thing that we're going to do is mark mark out our 5-minute range high, and then we're going to mark out our 5-minute range low. And what we want to see here is really a break towards the upside or a break towards the downside to find a clear direction here in the markets. Let's play out the tape. So as you can see right here for Tesla, we got that 1-minute candle closure underneath our 5-minute range low. Now what we're going to do is really look for the reaction off of this level for continuation lower. As you can see right here, we're getting some sellers stepping in, indicated by these upper wicks. We have a nice candle close right here underneath that 5-minute range low. This is where we can go looking short. Our stop is going to be a break above this key high. And now we're going to be looking for a minimum of a 1 to 2 towards the downside. Let's play out the tape. And as you can see right there for Tesla, we end up getting that solid reaction off of that 5-minute range low that I talked about. And we end up having this nice continuation down in towards the lows. So this right here is a good example of how to use that first candle strategy. Now let's go on to the next day. So as you can see, we're on the next day here. We have that first 5-minute candle played out, and we're going to do the exact same thing. We're going to mark out our 5-minute range high, and we're going to mark out that 5-minute range low. What we would like to see is a push towards the downside or a push towards the upside for a clear direction in the overall markets. As you can see right here, we're having this nice push towards the upside. We're getting that 1-minute candle close above our 5-minute range high. Now all we're looking for is the retest for a continuation towards the upside. As you can see right here, price comes back down to retest this level. This is where we can look long with a stop just a break underneath your 5-minute range low, and we could be looking for a 1 to 2 towards the upside. And as you can see right there on Tesla, we end up getting that perfect reaction that we talked about off our 5-minute range high. Nice push towards the upside. We actually came back once more, retested this level once again, and then finally end up having that nice push up and towards that 399. Now let's go on to the next day that we have. So as you can see, we're on the next day here, and we're going to do the exact same thing once again. We're going to mark out our 5-minute range high, and now we're going to mark out our 5-minute range low. And what we like to see is that break towards the upside for continuation higher, or we like to see the break towards the downside for continuation lower. Now let's go into the 1-minute chart. As you can see right here, we're having this nice push towards the upside. We're getting those 1-minute candle closures above our 5-minute range high. Now what we're looking for is the retest off our key levels for continuation higher. As you can see right there, Tesla came back into that 5-minute range high. Buyers are stepping in nicely off this candle here. This is where we can go look long. With this stop loss just a break below, and we could be looking for a continuation back towards the upside once again. And as you can see right there, super solid reaction, came back, retested it once again, and nice reaction for that continued push right up and towards the 410 and above. So you can see right here how simple this strategy is by using these 3 steps. It's working out very nicely here on Tesla. Now let's go on to the next day that we have. As you can see right here, we're on the next day here once again. We're going to do the exact same thing. So by now, you guys should have an idea of what to look for. We mark out that 5-minute range high, we mark out that 5-minute range low. We want to see a clear break towards the upside for continuation higher, or a break towards the downside for continuation lower. Now let's play out the tape. As you can see right here, we're now getting that candle closure plus the continuation lower. Now we can be looking for the retest off our 403 5-minute range low for this continuation towards the downside. As you can see right here, price taps back into this 5-minute range. Next candle is a confirmation candle towards the downside. This is where we can go looking short with a stop loss just a break above. And now we can be looking for a 1 to 2 towards the downside. And as you can see right there for Tesla, nice rejection right off our key levels. And then we end up having this nice continuation right down in towards our 397. And with that being said, as you can see right there, super solid push towards the downside there on Tesla for another nice win on the day. And as you can see right here, this is exactly how to execute the first candle scalping strategy. Go back onto the charts and back test this yourself and let me know in the comments below how it turned out. And with that being said, I hope you guys did enjoy the video. If you did, appreciate if you guys drop a like and sub, and I'll see you guys next week for a brand new video. Peace.